Oh, yes, I forgot about that. Hello, everybody, and welcome to our investor breakfast. I'm Bonnie Halper. I write the the somewhat opinionated Startup One Stop newsletter that goes out every Tuesday morning, which is also filled with a lot of helpful information for entrepreneurs. And we host an online breakfast every 2 weeks with one, or this time two investors from the same fund, and a self-selecting group of entrepreneurs. And we always keep the group small so that everybody can participate. And so we want to thank Kettle Space for hosting us, as always. And Joseph is going to tell us a bit about Kettle Space, which is restaurant co-working, and what's new with them these days.
Hey, good morning, everyone. Thank you, Bonnie. Great to be here. Unfortunately, I have to jump in 2 minutes, but real quickly about Kettle Space. So Kettle Space is a flexible co-working option in New York City, where you can basically pay by the month and come and go to any number of our locations throughout the city and Brooklyn. We reopened 3 weeks ago, and we will be expanding again to our pre-pandemic levels. During the pandemic, we actually built a software product that allows companies to bring their teams back to the office in a hybrid model. And so we now have a software product and our co-working model. And if anyone's interested in either, Bonnie can share my info, and I'm happy to chat with you guys at any time. Hope you guys enjoy today, and look forward to seeing you all in the next event.
Okay, thank you so much, and enjoy the beach.
Thanks all.
So Renee and Hannah, do you want to introduce yourselves and tell us about your backgrounds and something about Closed Loop? A lot about anything you can tell us about Closed Loop.
Sure. So I'll start with the basic intro, and then Hannah can intro herself and Closed Loop. She's way better at than me at talking about it. But I'm Renee Paula. I'm a venture partner at Closed Loop. That means I don't work full time with Closed Loop, for the record, but have been with Closed Loop for a little over a year, I guess, or more. I don't remember at this point. And my background is in finance and legal. I was a CPA in the late 90s with Deloitte & Touche. So it definitely gives me a lens around looking at the numbers of a company, right? But also went to law school, and then I've been a lawyer for a very long time. And I've hopped back and forth between legal positions and quote unquote business positions. So I just sold the company at which I worked full time for the last 30 years to Accenture. It was a consulting business, and I was the COO. So actually, I think the intro for this meeting still said COO of Bionic, and we literally just closed the transaction to sell it to Accenture. But I'm back right now in a legal position as the general counsel of a biotech company. Having said that, I think my connection to venture capital is that during my stints at Amazon, at AB InBev, and Bionic, I helped a lot with either corporate venture capital funds, so those big enterprises were making investments. At AB InBev, I was part of the leading team that created a new division called CX Ventures, which was when I started, I was employee number 22. We took that to over 1,500 people. But it was more than just investing. We actually operate a business. So we function as a private equity venture capital fund. And so within that group, my call to fame is that I did about 46 venture capital investments and 17 acquisitions in a very short amount of time. With Closed Loop, have helped from a sourcing and diligence and execution perspective. And then otherwise, personally, as an angel investor, I've made this one half a dozen investments, generally across CPG, because I understand it, having been in at Amazon, at AB InBev, beers, right, is consumer packaged goods, but otherwise in general, interested in many different areas. Obviously with Closed Loop, Hannah will talk more about what Closed Loop invested in, and again, she can explain it a lot better.
So as an angel, you only invest in CPG?
No. I'm not saying I only invest in CPG, but it just so happens. I mean, I invested in a beverage that ended up in Shark Tank, and it's doing extremely well at the West Coast. I invested in a food as your vitamin company called Daily Gem. I invested in actually Hubble contacts, right? Contact lenses back back in the day, like 3 or 4 years ago. I don't know. I've invested in a few companies. They're not food, but I'm saying more consumer than pure SaaS or tech. I think as an individual, it's somewhat harder to make those investments because usually they want bigger checks, and or you have to be very, very early on. Otherwise, by the time you hear about it in week 2, it's already a $250 million valuation. It's different than in other spaces. I think in tech, valuations go up very, very quickly, and as an angel investor, we can talk about that. It's not that great to invest at a high valuation from day one to begin with. Anyway.
No. Thank you. So Hannah, tell us about you and tell us about Closed Loop. You're there full time.
I am, but obviously, given his experience, we try to pull Renee in for as much as we possibly can. Yeah, but nice to meet everyone. For those of you who don't know me, my name is Hannah. For those of you who know me, my name is still Hannah. Really great to be here. I support our ventures team as an associate full-time. Closed Loop Partners on its highest level is both an investment platform and an innovation center, and our venture fund is the earliest direct investment vehicle on that investment platform side of things. So we're looking pre-seed and seed stage, and as Renee kind of alluded to, valuations are super important to stay disciplined at that stage. So we're coming in quite early at or below a $10 million post-money valuation on initial check. We reserve capital for follow-on rounds, but you can think of us as coming in at kind of that sweet spot today of 250K up to 500K on initial investment. And we are investors in the circular economy. So our thematic investment lens here is to invest across the sectors of plastics and packaging, recycling, CPG, not so much on the consumer facing side of that. We go deep into the supply chains for fashion and beauty, into food and agriculture, obviously a lot of overlap in those two supply chains, and thinking deeply about supply chain logistics and transportation technologies that can enable both environmental and social impact for what we define as the circular economy. We can really hold on to that as something that keeps materials in play at their highest value for as long as possible. So thinking broadly across those sectors, making lots of investments. Across the firm, we've got some debt financing for recycling infrastructure specifically. We've got a growth equity strategy dedicated to fashion and apparel specifically, and we've got a buyout fund kind of at the later stages. So really meeting companies with that arc of capital at lots of different stages, but I spend all my time thinking about the early stage side of things, and would be happy to take any questions about Closed Loop or more about our investment thesis.
By the way, she's the gatekeeper. Just to let you know, right? She's the gatekeeper. Be nice. Be
I
honest.
spend a lot of time reviewing pitch decks. Yes, I do.
What size are you? Oh, we have to go. We'll go around the room and have everybody introduce themselves. What size checks do you lead? And do you lead rounds?
We absolutely do. We're also happy to follow in and syndicate alongside other smart co-investors. The impact space is quite collaborative. We end up, meeting the same faces again and again. So street reputation is very important, but we are comfortable setting terms and leading around.
Okay, we should have everybody introduce him and all of our attendees. Abby, the Abbies are always first.
Which Abby do you want to go first, Bonnie?
Since you spoke up, you can go first.
All right, amazing. I am actually working on a CPG product with a co-founder. We are creating a home hygiene brand that offers a luxurious ritual of well-being while also focusing on eco-friendly formulations and some of that great packaging solution problem that we're all facing right now.
So then we have the other Abby who's closed. Abby, oh, you're muted, Abby. Abby Stern. Oh, I guess she's, we'll come. Oh, Abby? Oh, she's still muted. Angel. Oh, Angela, I'm sorry. Oh, there's Abby. Oh no, that's the other way. Angela, do you want to introduce yourself? Yes.
Hi everyone. I'm Angela. I'm the founder of Newfluence. It's a SaaS-based inclusive influencer marketplace that helps brands discover, connect, and partner with BIPOC and other socially diverse micro influencers and creators. Our goal is to help brands deliver data-driven campaigns that resonate with untapped audiences and ultimately lead to long-term revenue and increased market share.
Oh, thank you. Adrian Stern, who thinks New York is pooping.
New York is definitely not pooping. It's popping. Hi, everyone. Nice to be here again. My name is Adrian Stern. I'm the co-founder and CEO of Reveal. We're building a platform to automate the paperwork for content creators. And we've started in the music industry. We've been helping indie record labels, Grammy-nominated producers, and Spotify radar artists automate their back end, basically. The legal stuff, the metadata stuff, the copyright, all of the boring tasks that creators don't want to do. So they have more time to focus on what they love, creating.
Oh, thank you. Eric.
Hi, my name is Eric. I know I don't use the camera on here, but hopefully you can hear me.
Yes.
I run a social media platform for college students and alumni called Freeze Crowd. It's more private and community oriented as a platform. We do require an EDU email address, and it's more like a yearbook. We keep your information free from the outside search engines, and we connect you with your school community.
Oh, thank you. Jacqueline.
Hi everyone, my name is Jacqueline. I actually found out about this because I just graduated from FI, but I am yes, New York cohort. But yes, I own Ecomatic. We are a marketplace for local and sustainable businesses, so you can find accommodations and experiences. It's in development and it's launching in the fall. And we also have an online green travel magazine that connects to community events so that travelers can find local sustainable events that are happening either in their own backyard or in the destination that they're traveling to.
Thank you. And you did a great job at Demo Day the other night.
Thank you so much. I appreciate that.
Yes, I mentor Founder Institute. We have another Founder Institute alumni here, and that's Monish. So I'm going to have him introduce himself next because we're doing a theme.
Thank you, Bonnie. I am Monish, and I'm the founder of Integrate Pitch. Integrate Pitch is in a journey to share inventions, especially the unused patents and intellectual property, to get them to see the light. Now, we started with a platform that connects inventor with CAD and prototype designers, but now we're pivoting. Bonnie, I'm sorry, it's not out yet, but we're pivoting into token creation for invention economies.
Everybody pivots, right? Right,
Yeah.
investors, everybody pivots. Jim.
Hey, thanks for hosting me. My name is Jimmy. Sometimes I go by Jim. I'm trying to commercialize one of my academic friends' research on machine learning and natural language processing using trend prediction. We're really good at predicting flu outbreaks using Twitter data and trying to find the right problem set to focus that research on to make it commercially viable. So thanks for having me.
Oh, wow, good for you. John Chidiak.
Hi. Hi, everyone. I'm glad to be here. Thanks for having me. I am the founder and CEO of Blue Space. We are working on developer happiness. Developer happiness, we're a B2B SaaS company. Developer happiness is highly correlated with developer productivity, highly correlated with higher product quality, highly correlated with increased security, a whole bunch of things that kind of reduce costs for technology teams. So we developed a machine learning technology teams to help them increase developer happiness.
Okay, thank you. Oh, we did. I don't know who Debeni or Dabini? Who is muted right now? So would you like to unmute and introduce yourself? Sometimes people get, all right, Mike, I know that you're not shy.
I'm not. Hi, everybody. How you doing this morning? My name is Mike Riscala. I'm CEO and co-founder of Snorble. I have been and led teams that have had global transformation impact in terms of technology twice before I was 30. Second one's actually more important to Snorble. I was part of the team that removed, or I should say led the team. I led the team that removed paper from animation back in 1999. And with that, we had many first. I took all those digital assets and created new experiences. Then I opened up my own product house where we would basically, develop out products from end to end, performas, market research, all that type of stuff, all the way through to releasing an MVP and then ship products. And we've done that for everyone from Target to Pearson to MTV and all the way through. And about 7 years ago, I used our own techniques and research to help myself figure out what I wanted to be with our company. And essentially, I decided that I wanted to define the human interaction experience for robotics. And we opened up a robotics lab, invested heavily, and essentially 7 years in the making, Snorble's kind of the first fruits of that labor. And what Snorble is it's a little robotic companion that inspires the minds of our children in order to help them establish healthy habits. So it's AI for social good, essentially. And, we ran our Indiegogo campaign a little while ago. We did 200K in revenue in 20 days, sold 1,000 units. Snorble is doing very well, if I could say that. And we're planning to release our first to customers in October, November.
Oh, thank you. Pedro. Oh, you're muted. Everybody's muted today, or shy. Rachel, do you want to introduce yourself and tell us what you're doing? Rachel Schaefer? Oops. Or Stan Chen. Oh, Rachel will, but not yet. So Stan Chen.
Hi, everyone. Good morning.
Oh, you're muted. You're muted, Stan.
Hi, Bonnie. Good morning.
Hi, how are you?
Excellent. My name is Stan Chen. Hi, Renee and Hannah. Good morning. My name is Stan Chen. I'm the co-founder and CEO of RecycleGo. We are building and deploying a blockchain for recycling to track materials as they travel through the recycling supply chain, using a distributed ledger to optimize that process and really bring transparency to the process. Thank you for having me. We are deploying in about 60 days in our pilot projects in Nigeria, and also working with the plastics recycler in India to track the materials over there, as well as tracking fishing nets back into nylon pellets over here in the US and in Greece. Thank you very much.
Rachel, thank you. Rachel is shy with the recording. You can just speak. You don't have to show your face if you don't want to. If you want to introduce yourself. So, questions for our guest investors.
Go for it. By the way, Mike, I love your background.
I live in Lullaby.
Calling out the company. It's smart in big meetings to have an interesting background to always be selling, always be putting out there.
All of our investors also have it. All of our team has it, but it's not the same background. We all have different versions of Lullaby. So it's super fun too, because you got to have fun while you do this, right?
We did the same thing, except my company now merged and has a different name, Vaccinity. But yeah, we all had the basic COVAX background. But yeah, I definitely encourage people out there, if you have a startup, you have to be putting out the name 24/7.
Absolutely.
Always be selling. So Mike, do you have a question while we have you there on stage?
Oh, Yes. Well, I do have a good question actually. So we just did intros, and one thing I always find really interesting is from the perspective, and listen, I angel invest too, so I have my own lens on this. But from a VC perspective, especially, you just heard everyone give the intros. What things either caught your attention, or would you recommend, in terms of that 10-second pitch? That's like your first step towards communications. I'd love to hear your thoughts on that.
Hannah, you want to go first?
Sure. I think, well, first and foremost, repetition is helpful. So repeat, often you miss the first name or the first iteration of the company name coming out. So repeating it multiple times throughout the few sentences is actually quite helpful to make it stick. And I think brevity is always appreciated. Keep it concise, keep it tight. And last but not least, the use of buzzwords was kept to a minimum here. So thank you all for that. I think really helpful not to throw around too much, like too many buzzwords or too much jargon. I think get straight to the point, teach it as if you were teaching it to an 8th grader, and it's well reciprocated.
Hannah, could I just add to that question, if that's okay?
Sure.
So here's the thing, would it be more beneficial from your perspective to hear either more about the company vision, or about the history of the founder, or about, like what kind of things appeal to you on, because you can't fit, your pitch in that time frame. So it's like, what's the first hook that kind of go, oh, there's something.
Sure. I would say the core of what you're doing, the core of the business. I wonder if Renee has a different perspective. It's sometimes helpful to lead in with a personal story. If you have a little bit of a longer format of who you are, it helps contextualize. But for something really short, I get straight to the core of exactly what it is that you're doing in which markets, and helps orient the conversation. Because then, follow-up questions can be more tailored.
Yeah. So I
agree with everything Hannah said, right? I would add, if we're looking at seed funding or pre-seed funding, right, very early rounds, throwing out big buzzwords, and a couple of people talked about machine learning, and a couple of people talked about platforms, etc., which is great in terms of where you're going. But when you're talking about very early stage funding with 2, 3, maybe a handful of people working on a project, I think what's more important is to talk about the problem that you're that you're trying to solve. And for 3 or 4, or I don't know, a handful of the people that spoke, I'm not sure I understood what the problem was, right? So, you can say that, I am building a next generation, platform that is going to use machine learning to, I haven't said anything. So I'm being kind of blunt, because to be helpful, right? Because everybody says the same thing in this thing. So I'm going to try to be super direct, because otherwise I don't think it's helpful. So I would almost start with, I realize that the restaurant industry has dead time during the day. So, and I know a whole bunch of entrepreneurs have nowhere to sit. So I'm going to create a WeWork that is using restaurant spaces. I'm going to call it Kettle Space. I just made that up because Joseph introduced himself, right? But I would attack the problem, and then how you're going to try to solve it, maybe, which I know it's not as sexy as we are the WeWork for X. But again, N of 1, my personal view is, when you are early stage, you need to talk about the problem, because that's what the VC is going to care about, whether it's a big enough problem, whether I care about that problem, as opposed to whether you're using machine learning or, a mechanical Turk in the background. It doesn't matter at the beginning how you're solving the problem.
Very good. Thank you.
I work with entrepreneurs, and I always tell them that investors want to know about the problem, the solution, the team, the differentiators. And so many of them in their decks just go into the technology. They're in love with the technology. Investors are bad exits. True, Renee and Hannah?
Oh. To tailor your deck to make sure it includes the problem?
Yeah, get to the point. What do you want to see?
Yeah, 100%.
Yeah,
absolutely.
But questions, any more questions, comments, concerns, pitches?
I definitely have some questions related specifically to CPG, because I've just in the past few months sort of gotten into this investor space and sort of learning about some of the differences, as you mentioned, between the categories, valuations, and different terms and what people are looking for. I'm curious about this. We've gotten different advice on the size of the seed, particularly depending on what coast you're on. And also, like, do you raise on, saves, convertible notes? Like, what is standard?
Yeah. So I'll give you my view, and then Hannah, you go. My advice to entrepreneurs, founders, is always not to raise as much as possible, obviously. And what I like about CPG is that you can finance your inventory, right? You can finance your product. There are other financial instruments out there, so that you don't have to necessarily be taking VC money on everything from Kickstarter campaigns to again, manufacturing, financing, and I'll try to find a couple names and post them on the chat. So it's really about, can you get out your first or second batch of the product, and then once you truly prove the product, then you go ahead and start raising venture capital purely as fuel, as opposed to most other companies where it takes a little longer to get out of the gate if you don't have the initial $50,000, $100,000 to launch a product. And while it's great to start a software business, with $0 and just program it yourself, on CPG, if you're able to, friends and family collect the 50 grand or 100 grand to do a first batch, you can build a big company and own a lot of it. So meta point is, try to figure out how to launch a product without raising a lot of capital at the beginning. But otherwise, it is a lot more straightforward to use saves this day. I started in the late 90s, and of course it was our convertible debt. But everybody's comfortable with saves, and they're just way easier and faster. So I would just go with a save. From a valuation perspective, I don't know if I've seen a significant difference between East Coast and West Coast, and again, at least on CPG. And I've invested on both sides. To the extent it exists, I would almost argue it's a lot more about the sector and the potential growth and speed, right? So for example, I have launched products working at Amazon and AB InBev on different coasts on purpose, right? So I launched a particular fermented, kombucha type beverage out of the West Coast, started in Oregon, and then it went up to Washington and down to California, and then move east from the West Coast. And similarly, I've launched opposite products, right? A rosé canned wine, I launched it in New York, go up and down the East Coast and then west. So there are certain strategies based on the different tastes on the different coasts, etc. And perhaps that's driving some valuation differences. I would have thought, again, in the CPG world specifically, or consumer work more generally, that it's really about, you get more in the West Coast or less, etc. And then last comment, stop rambling. Again, just a much higher valuation just also means that you have higher metrics to meet to be able to move on to your next round and next valuation. And the more money you raise, the more rounds you have, the more difficult it will be to exit. So again, Hannah and I, Close Loop, we're Close Loop Ventures, right? Close Loop Partners is a relatively big organization. Close Loop Ventures, Hannah said at the beginning, we invest very early, because that also allows for relatively quote unquote early exits, right? And so to finish, again, I just sold the business, happened to be a consultant business, like a startup studio, to Accenture. It was more than 50 million. It was less than 100 million. I think everybody, a couple of people got earth-changing, life-changing money. Others did not. But we would not have been able to have a successful exit, a very successful exit, if we had raised a lot of money, right? Versus if you only raised like basically nothing, a couple $1 million, and then you sell for 75 million, it was a great deal, right? Like 2 to 75 is amazing. So it's all about how much money you raise, how are you going to exit? Are you going to take the company public? You're going to try to sell it again. I wouldn't focus so much on the round, but I've talked about a lot of things all at once, so I'll shut up now.
I think all of those were super important. Go ahead, Abby.
Oh, and I don't want to take, if other people have questions, I don't want to take too much time, but I am curious because the advice we've been getting is almost opposite of that, in that they thought we were asking for too little. We had been, I had thought 350K would be fine for, that 18 to 24 months runway. And I felt pretty confident that we would be able to, exceed on that based on some of what we have in the works. And we were told it was too small, that it wouldn't be taken seriously as a raise, and a lot of other advice. So I'm just trying to figure out what our comfort level should be there. And I had heard, it's interesting that you're saying safes both coasts. I had been hearing also that on the East Coast they are not doing safes yet. So I'd love to, on both of those points of view.
Anna, you go first.
Sure. Well, we're definitely doing safes on the East Coast. We are comfortable with safes, convertibles, and true equity. So you gotta definitely, it'll be kind of investor specific. But I would say safes are super common, and they're generally pretty founder friendly. They often don't require some of the upfront hurdles of like converting to a C Corp or some other logistics immediately, which can be helpful for you to stage out the that side of the business. I think one of the things you should definitely not do is try to raise more money than you actually know how to deploy, because the clock really starts ticking. And as Renee said, the more you raise, the higher your valuation, and you start to like really put yourself on a bit of a growth trajectory that you may or may not want for the health of the business. And you can grow a strong kind of cash flowing unit economic positive business by bringing in 350K only at a reasonable valuation. And so I think it's not only the exit, but the interim raise. So if you need just that 350K now, but you're going to need 5 million in 2 years, or at the end of this 18-month runway, that's important to consider as far as where's that additional money going to come from? Can you hit the KPIs that are going to get you to a place in which you really are ready to be a Series A company, raising something like a 5 million? And what does that look like for the health of the business at that time? Are you growing for the sake of growing, or are you actually growing with a kind of bottom line that's being realized as well? One of the things that you probably learned this from venture deals, but don't go out to the market with a range. Don't go out with like, I'm going to raise between $1 and $2 million. That's not actually a helpful use of your time or your investors' time. It says to the market that you don't actually know what you're going to use that money for, because that difference is big. So if you have a very clear use of proceeds for that 350K, that can be perfectly suitable. And maybe it's just that you need to target different types of investors. So maybe not a traditional venture capitalist, but perhaps instead an angel syndicate or some other type of network who would be willing to write a smaller check, who could help bring in some type of strategic value to the company at that early stage. Is that helpful?
Very helpful.
What is your typical check size?
Sure. We don't typically write 50K at a time. We are sitting at our kind of sweet spot these days of between 300 and 500K on initial check. And it really depends on the company. We could flex up or down again, but depending on the kind of legal hurdles, we're not gonna invest, 100K. Our job is to deploy capital. So we're not going to invest 100K in true equity kind of out of the gate. It's not necessarily worth it from us. We want to put in a sizable check and also have line of sight to deploy. Maybe, if we put in 500K, we want to put in about $1 million over the course of the company's lifetime, and ideally in the subsequent rounds. So
you combine that with, again, a pre-money of 10, it tells you that we lead many times, right? Because it's a low valuation, so the race is going to be at best, $1, $2 million or whatever it is, right? So we write a significant portion of that initial round, that seed round or whatever, pre-seed or seed.
So, does anybody have questions?
I have a question, actually.
Please.
So in terms of how you like to be approached, because a lot of people here are probably trying to figure out how to, right now, obviously it's much easier because you've met the people on the call. However, when it's cold and people are trying to approach you, what is the way that you like to be approached?
Sure. I think venture historically has been a bit about who you know and who can get you an introduction. And I think that is very much changing. I don't come from a venture background, so I do think that both getting into venture on that side of things and approaching venture capitalists is changing quickly. The first thing that you should do, I would suggest, is to crawl through every page of your investor's website. You should learn as much information as you can about that investor. Many of them will have an avenue established for you to reach out, whether that's an info at address or a kind of web application portal for where you can submit a pitch deck and apply for funding. That's a perfectly suitable way to do it. What I would say is we try to respond to everyone who comes in the front door for us. That's probably not the case at every venture capital shop on the street. What I'll say is that your best tactic is probably a kind of suite of solutions. So you should certainly apply via their process to point out that you know them, you're aware of what they're asking of you, you've submitted all of the materials, you've made it a very thoughtful and thorough application. You should also try to backdoor and get an introduction in some way. LinkedIn is an incredible resource and you can easily find connections. And I would certainly say leverage those connections, get your pitch decks in the hands of more people or other investors, and try to have them approach in a couple different directions so that you're at least getting a phone call there. Don't go over the top with it. You don't want to overwhelm your investor, but you do want to kind of get their attention. And it won't always work. It's not a silver bullet strategy here, but I would say it's okay to approach from multiple angles or to reach out directly yourself on LinkedIn and highlight some connectivity there. But when you get a no from an investor, a couple of the things that you might ask that I find that people really don't take the opportunity to do is, one, ask for feedback. Even if you get a no response from that, at least you asked, and hopefully you'll get some why behind the no. And two, you might ask, it's perfectly suitable to ask, I'd love for you to keep us top of mind for any other investors you work with for whom this might be suitable, or do you know anyone that we should reach out to who might invest in our space if you're not going to. Those are perfectly reasonable asks kind of in follow-up to the conversation that I find people don't often capitalize on.
But add two things to that, which was extremely good. One is more is not necessarily always better. And I think the reason I'm the type of person that tries to respond to everyone, because I guess I'm old school. I'm old enough. I don't believe in ghosting. It's not nice. I don't like feeling ghosted, so I don't ghost anybody. So if someone reaches out to me, I try to respond. The problem is that perhaps based on advice that has been out there now, for a decade, founders reach out to so many VCs that they just create a cookie cutter email and send it to every email address on a spreadsheet on StartupOneStop or any number of places, right? And so we are a closed loop, circularity economy, somewhat environmental tilt, right? But still invest in technology around supply chain, invest in heavy duty material science, right? How do we replace Gore-Tex, right? Like Gore-Tex is an amazing product, but it's bad for the environment. So we invest in heavy duty stuff, but then we have people emailing us, I'm launching a new, combustion engine. So why are you reaching out to me? I have nothing to do with that. And I would never invest in it. So the amount of inbounds that we receive that are completely irrelevant is insane. So my advice to you would be that instead of just finding every possible email address and going down the spreadsheet and sending your pitch, you got to spend the time. You have to spend the time to understand which ones of those could possibly invest in you based on their thesis, and then only write to those and customize your messaging every single time. I know it sounds stupid. It sounds idiotically simple. It's amazing how many inbounds we get that are the complete opposite of anything we would ever touch with a 10-foot pole, okay? And then point number two is that then once you have done that work and realize that this particular fund invests in your sector, I think one of the biggest hooks that you could do is then actually point out a portfolio company that fund is invested in, and then actually ask the question, I saw that you invested in X. Would you invest in a similar company, or are you prevented from investing in any more, putting more money in that sector? Because many funds, you may have a fund that has invested in something very similar that is awesome and could help you. At the same time, they'll say, well, we're conflicted. We only put money in one, right? Like I put money in Uber, I cannot invest in Lyft. But by coming out of the gate with a very specific, I know what you do and what you invest in because I noticed you put money into X, and I'm doing something that is not exactly X, but it could be down your swim lane. Maybe you want to talk to me, but let's not waste time. So you've shown me so much by asking that question that it's like a line and a half on my inbox. Then I'm gonna keep reading. So I think you got to do your work. And again, I think VCs, we receive simply too many inbounds, and it's become out of control. If you show that you're not just another random throwing a dart at the wall, you'll get attention.
Great point.
That's
Thank you
great.
for making it. Did you have a follow-on question, Mike?
No, I just want to say thanks. That's actually definitely in line with what I do anyways, because I think it's important. You need to, no one likes to have their time wasted, right? That's kind of that's kind of the point of it.
We have a latecomer, Mary. Mary, would you like to introduce yourself? Oh, if she's still there, maybe she left. Oh, don't see her. Anyway, next question.
I actually have a question. I have I've been speaking with an angel investor and presented my pitch deck, and then now he's interested and wants to schedule a follow-up call and has a few questions. So typically, and just admittedly, I'm very new to the fundraising process. Everything has been moving much faster than planned. And just from my network, because I come from the entertainment industry, they're very interested in what I'm doing. So that being said, this angel investor knows who I am, understands the type of work I do, and interested in investing. Now the second conversation is scheduled. And so typically, I guess just on average, when an investor wants to have another conversation and they've expressed interest, what should I be mindful of in that next conversation?
So Hannah, I'll start and then you go. I don't think it's that different between an angel and a fund, but overall, an investor is willing to lose some of their hard-earned money to try to put it to work and get a big return, right? And I would almost say that for an angel, it's harder than a fund, because for an angel, it means it's actually my personal money, right? For a fund, it's someone else's money. And people need to realize that, because again, I have written personal checks, so I have lost personal money, and I don't have that much money. Now, it's different when you're talking to a true, millionaire. But again, there's people out there that maybe are silly, dumb enough like me, that just want to help out and see what happens and put 10 grand, hope for the best. But it's their hard-earned money. So I think you have to treat it slightly differently than a venture fund. But again, that's a nuance that I'm not sure everybody, pays attention to. And so some folks want to be first, right? Some folks just want to be able to go along for the ride. Ultimately, whether angel or VC, people care about whether you have what it takes to get this company off the ground, because it will be extremely painful and it will take a long time. And then whether or not the problem is big enough that it's worth attacking. Now, a problem may be big enough that it's worth attacking, but then it starts going down the rabbit hole of, will you be able to compete in that space and make a decent sized business for yourself, et cetera. everybody will have different ways of, doing their diligence. For the most part, I'm sure, and all the advice money gives is spot on in terms of what are the items that people are looking for to learn about, right? So ultimately, I would say when I talk to a lot of entrepreneurs and founders, I want to feel that you know a lot more about your business than I. And if I ask a few questions and I, unravel the company because you don't know the answers to those questions around that industry, around that sector, then I'm going to lose a lot of confidence about whether or not you will be successful. Because even if you have the grit and you have the optimism, again, I just from talking to people I've never been in your shoes, I might know enough to be dangerous. You have to know more than just being good enough to be dangerous. And again, make that angel investor feel comfortable that A, you have the grit to get through it, and B, you truly know enough about this business that you have thought through what you're going to do with the business to get it somewhere. Because especially that second part, like, have you thought through things that you might not even know, but you need to know what you don't know and be able to say, like, I still don't know A, B, C, and D, but I have a plan to attack it. When I ask a question of a potential investment and they don't even realize they didn't know that, I think that's a big letdown. So anyway, just try to think through even the things you don't know. I'll be prepared to respond as to how you're going to attack them. But yeah, that's my quick view.
Just a follow-up question, and thank you for that. So I got hit with that in my first call. And then, so obviously I should be prepared for a little bit more in the second call. I'm trying to, as you know, like, a second call is a great step. It's a step in the right direction, and closer to a check being written. And this person, by the way, is a millionaire. And so I just want to, because this is still new to me, and I want to make sure everything is crossed and dotted, that, what's the kind of gotcha question? And then also to that point, I've read a lot about, if you don't know something, it's okay to say you don't know, but let me find out.
Yeah, 100%. You don't need to know everything, but you can find out. But anyway, Hannah, I'll let you go and I'll come back. And Mike raised his hand, but I don't want to do all the talking.
No, I think if you put yourself in that investor's shoes, right, the second order of questioning is going to be, where are there holes, or where will this thing break down? And so they're trying to stress test the different facets of your business. Of course, they're going to break that down, team, market, product, but you have to go the step beyond in each of those segments and say, like, okay, is it going to be the competitive landscape? Is it going to be, so you should be doing that constantly anyway, and taking note of the questions that you get asked from these second calls or follow-up calls, because they will help you craft that narrative. And I think maybe, to say I don't know, I'll find out, is probably too surface level. You should say, the considerations that that we've had internally about this are around XYZ. We find that the industry doesn't yet have clear answers on ABC. Like, you need to craft that in a way that you have thought and anticipated about that question, but that there is not a clear answer. And you might lay out, as the CEO of this company, I see my options as, I could test X, intervention with the company, or X product. And if that doesn't work, I might go down path B. You need to be demonstrating your ability to problem solve around what you learn from the market and what you hear from your customers. And that, I think, is evidence of humility in a founder, and also kind of coachability, in which you might reverse the question back to them and say, here's what I thought about a potential strategy, or where I want to learn from the market. Do you have any advice on what I should be considering, or things that you've seen gone right or wrong in other companies? And then you're actually starting that partnership, and you're starting that relationship with your investor of, like, how are they going to help you navigate some of the challenges you will encounter? But I think showing that ability to reflect on what you learn and iterate on the challenge is going to be crucial.
Mm-hmm. Okay, great, thank you.
Yeah, but I have to agree with everything that Renee said initially, so take that. Sure, so Mike, are you
I just wanted to offer some advice to Angela, if that's okay. So Angela, this is something I've done in the past, which is really helpful, is that there are resources out there around 100 questions that you'll be asked around investment, right? And what our team does leading up to any pitch or any new concept, and even from the past things that we've done, is we've actually sat as a group and went through those questions and grilled each other, right? It's a really good idea to have someone that's raised capital before to actually run through those questions with you, because they'll have a different lens on it, and I find that really does help. We did that leading up to we did an angel round before. We're in the middle of a seed round right now, but we did an angel round before, and in order to convert a syndicate that came together, we did a lot of prep. It was still very fresh new concept and all that. And what we found, and we did convert. We converted, almost every time we went through that process. Every time we were a bit looser, kind of went a little looser too, right? So you have to do the work. You have to do the work. And the other thing I would say, and just to add to one of the points there, is that it is like, I know that people tell you, it's okay to say you don't know. And from my perspective, it really depends, when there's things that are no one can know, that's okay, right? Or when there are things that are like so far ahead that you can't, like, what's your exit strategy? Well, we're two people right now, so so yes, there is one. We have our dreams, but it's not real yet, right? But the things around your business,
exactly.
Yeah.
Well said, man. You better articulated the point I was trying to make before. 100%. There's things that you don't know. You should say I don't know. But it's just, there are certain things that, again, you need to know what you don't know and be able to talk about the things you don't know. But again, you know that you don't know them. It's just, it's a different point.
Next question. Does anybody have a question?
I don't want to take up everyone's time, but I guess because I'm working in CPG, I probably have a lot of, CPG related questions, since it's a little bit.
Feel free to ask them.
Okay. I do have some curiosity. We're interested in doing a hybrid model of, some specialty retail and then DTC subscription, as well as some DTC sales of the initial product. The product comes, you order the bottles and the refills. It's not earth shattering. It's more about in the formulation and some of the other scent that we're working with, that we're doing something a little different than what's out there. But I'm curious about feedback on hybrid models. And then of course, anything, we've spoken to some people that are like, why not just try to, sell it to, Bed Bath and Beyond or something like this and get a big order. I just have some curiosity for closed loop specifically. What do you prefer, the wholesale? Do you prefer DTC? Trend wise, do you see anything happening?
You want me to take the first stab?
Yeah.
Okay. Generally speaking, direct to consumer is just, it's hard. Period and full stop. Direct to consumer requires a lot of marketing. It requires a lot of continued engagement, and it's critically important in direct to consumer to have strong unit economics, and even then, it's still very hard to execute. So we've seen a number when in a crowded space for personal care and refill, and in a space in which you're also doing a bit of consumer education and kind of this new format in which you're trying to deploy product, having your channel to market as a differentiator is pretty important. And so I would say there's just a lack of, direct to consumer puts you on the same footing as many other competitors and is harder to execute. And so insofar as you could try to have that as part of your strategy, but helping you identify other and more consistent channels seems to me like it could be a really valuable asset to the company. I don't know the nuances of your particular situation, but I think on its highest level, from the closed loop perspective, we have a tough time investing in brands We don't consider ourselves consumer investors. That doesn't mean that there aren't consumer investors out there who could really understand that, but your kind of marketing strategy and your ability to keep customer acquisition costs very low is really important, and something that we don't always get super comfortable with, just as an N of one, as Renee said. But Renee,
Yeah.
do you have a dissenting opinion?
No, I would add a few things. It's funny because as I joined Close Loop and we talked about our own criteria and investment methodology and how do we evaluate companies, et cetera. I mean, I was a big fan of, and push, pen on the table around frameworks and decisions and how you do that. And I talk about all these Venn diagrams and to what Hannah said, investing just in a brand is very difficult, right? Again, there are consumer investors and angels and VC funds that invest in consumer, but you're somewhat throwing a dart at the wall if it's just quote unquote a brand, right? We can spend a lot of time defining what that is, right? But if you don't have proper other IP in terms of the material science or the packaging or something critical, or a major business model innovation on, shipping the product and taking the bottle back, which everybody now talks about doing that, but that's also very hard, very carbon intensive. And again, I came from the beer world, so I'm familiar with returnable glass bottle systems throughout the world, except in the US. I mean, the US just throws bottles out. A lot of the world actually gets them back, right? Which is amazing. But so people are now thinking about that, but that's not that simple when everything is through the mail. In the rest of the world, you actually hand them back. Anyway, so you need to try to find a way to not just be a brand from my perspective, from Close Loop's perspective, right? Because then there are people that invest in brands taking a chance. But to the extent you can truly have a real, soft IP through community and other factors, or hard IP with, again, like the packaging, the material, et cetera, it'll be a much easier road. Now, separate point, you started with the model itself. I would say that hybrid models are extremely difficult for all the reasons that Hannah said. Plus, from a pricing perspective, if you're going to go direct to consumer, usually the sale is, or the easy sale is, well, we're cutting middlemen. You're going to have a better price for the overall product from, ingredients, materials, whatever, that if it was sold on a retail, right, location, because you don't have the wholesaler and the retailer, et cetera, right? But then you get caught into the pricing trap where you price it at just enough to make your own 20 or 30 or 40% margin. But then you try to go wholesale or retail and realize that you cannot continue to sell the product on DTC at the same price. So you now have to increase the price for wholesale. And then you have channel conflict and the whole thing goes to waste. So if you're planning a hybrid model, your DTC price has to be much higher from day one so that you can maintain a baseline that your wholesalers and retailers can work with. So again, starting hybrid is even harder unless you price correctly. And therefore, if you're going to price higher in DTC, it means you really better have a very, very good product that people are going to be willing to pay. So, I mean, we can take this conversation offline, but it's, of course, it's the best to be omnichannel. But if you're starting from scratch as omnichannel and the first door is to go DTC, make sure you price a lot higher than you feel comfortable with, because it's going to be very difficult to shift to the retail side if you don't.
Thank you.
And I asked not a question, but I have an observation in a way, and I'd like for you guys to reflect on said observation, because this might be kind of a fun thing to do. So, okay, our product, our first offering is that we're going to help kids get to sleep on time, help them stay in bed, and then help them wake up feeling refreshed. And it's through an entire experience that we've created around that. So when we first started introducing and kind of like circulating this amongst friendlies, right? There was obviously, they were all like, oh yes, because they know me. But then when I started going outside of my friendlies, one of the things that happened was people said, well, do we believe that parents would really want that? To which I was like, I have two kids. I have one that's 7 and one that's 5. To which, of course, the answer is Yes. Right. Of course, parents want that, right? But it was one of these things where I was like, oh my God, this is a situation where I need to show proof, right? So we had already done our research and everything else, but what I did was I created an independent research study to showcase that parents wanted that in order to disqualify the risk, right? I know that there's some things that that you would need some validation on, but there are also some things that are really common sense, right? How do you folks look at those types of de-risking moments, when you're looking at investments? Do you expect in certain cases for people to do those types of activities, or when do you feel like that's necessary, I guess, is more or less, because I was kind of like, you got to be kidding me, right? We did it, but even in my head I was like, you got to be kidding me, right?
But Mike, I think sometimes all of us entrepreneurs get so excited and are such strong believers of our ideas that we somewhat get tunnel vision, right? So I hear you and I respect your position, and to some extent, some are like, duh, yeah, everybody wants that. But even to Eric Ries's book and Lean Startup and Validation and LOFAS, right? Like a leap of faith assumption. So you're taking a leap of faith assumption. Like, how do you validate, whether it's through surveys or whatever, right? Like, you have to do it. But Hannah hopefully laughs at this. But to come to your point, like, for example, we had a product come in, and it's like, who would not want this, right? And I always refer to it as the juiceroo problem. I don't know if you remember this company.
I remember juiceroo. Yes.
Oh yeah.
Where it was a machine they send you a bag, the machine squeezes the bag and creates juice on the spot. I always talk about that because we had a juicer moment relatively recently when there was a company, people were excited to invest in it. And I said, wait a second, I went to a store, bought a different product, brought it home, changed the insides of the product with a different liquid that also bought in the store, and accomplished 95% of what these people were selling. And I literally tried that product myself as a person. And Danielle and Hannah were like laughing, like, what are you doing? This is crazy, right? This is silly, right? I hope you recognize what I'm talking about, Hannah. And I just showed that, sure, the problem may exist, but sometimes the solutions, people get very excited about their solution. And there are other solutions out there that are like similar, simpler, cheaper, faster, that I don't have to buy a machine to squeeze my fruit when I can literally buy the bag and squeeze the fruit myself, right? That was the juicer problem. If you don't know about this, go look it up, because it's a problem, again, that entrepreneurs fall into. And look, I was a founder. I went through this thing. You went, like, people have kids, they find a problem. I created a baby product. I got a patent. I sold it. But you go from a moment, like, you think every parent has the same issue, and it turns out that it's just not true, right? Like, people do have different ways of parenting, different ways of thinking. And for example, when I thought that other dads want to help, mothers not be the ones getting up at 3 o'clock in the morning to feed, turns out that not that many dads want to get up at 3 o'clock in the morning and feed, and they just let the mother do it. So again, it's a big leap of faith assumption that you actually have to validate.
I was with you, by the way. I got up every time. My kid was like, she needs rest. No, but I totally hear what you're saying. And we do, like, in any good product process, you have to run your process, right? You have to go through those identifying your customer and really digging in and all that type of stuff. Anyways, that was great. Thank you so much for that.
The only thing I can add to a fantastic answer there is that, on a very tactical note, the analyst or associate reviewing your initial pitch deck may or may not actually be a parent. So make sure that you're validating and speaking to the market. That's probably too pragmatic to be funny, but it's true.
It is true. Absolutely. And it does make a difference. It makes a huge difference if you actually experience the pain of whatever the product is, right?
It's true.
And I think it's interesting that he did an Indiegogo for 20 days and sold $200,000 worth of a product, pre-sales, which shows that it is a problem out there. Well, it does sort of validate it. Pedro has a question. Pedro, do you want to ask the question? He posted it in the chat. So you're muted right now.
And it's all right, see it. And yes, we've done lots of investments. We did a great investment with UCropit in Argentina. Wait, am I supposed to talk about it? I think it's probably
Yep,
right.
all good. Yep,
We
totally.
invested in Argentina. We invested in Israel. We invested in Switzerland. Some of the best projects we have are people that filled out the form on the website because we paid attention and they did a great job and they have built great companies. But Hannah, go for it.
Yeah, so the parameters under which we would invest internationally, generally speaking, we would like to see, and this is a personal preference of closed loop, we would like to see the product or service be able to apply to the US market context. The reason for that being is like, great, we're excited for it to have foothold and expansion opportunities internationally. We also, as a kind of strategic, helpful, and active investor, we want to know that we can be supportive to the company as they expand to the US and start to service this market as well. Not every investor will have that type of parameters, but maybe helpful for you to keep in the back of your mind as also as you evaluate, potential investors. You want to understand how they might be helpful to you and the company's growth as well. And I guess maybe speaking to Eric's point earlier, also in the chat, agreed, not every VC is the same, and you'll kind of have to suss out those personal preferences and styles of investing and styles of communicating for each one individually.
And so, and to add to Pedro's point, to the question, I think sometimes international startups get pressure to come and domicile in the US, which I think is very unfortunate. Like, closed loop does not push for that. If you're not a US citizen, why should I force you to pay US taxes? So I think, Pedro, to be clear, I don't know what country you're in, but at a minimum, you just have to make sure that it's a country in which there's good rule of law protecting investors' money. That's it. So there are a couple of countries, and I'm from Latin America, and I've invested a lot in Latin America, so that's why I'm just speaking about this. We invested in Argentina, etc. There's a couple of countries that are somewhat sketchy and difficult, right? So Portugal, awesome. But when you have that situation, doesn't necessarily mean you need to like go and get a Delaware corporation. It just means that at a minimum, get into a regional country that is well seen as an investor friendly place. So if you're in the middle of, Paraguay, right? Number 43 in like most corrupt countries from a score perspective, it's bad. Like, I just did a deal there, so it's okay. That's what I'm saying it, right? Like, most US banks will not process money from Paraguay because it's below 30, below 40, they don't process money from the country. So it's like, how am I going to even literally send money to Paraguay if I can't get it done? So you just need to understand your country and the challenges, and shift next door to Panama, and then we do the deal through a Panama holding company. You don't have to come to the US. And if someone's asking you to come to the US, try to push back if you have to, because I don't think anybody should pay US taxes unless they have to.
I don't think anybody would argue with you there. Next question. And Abby, feel free to ask any question you want. This is your stage too. Oh, Pedro has another question.
Sure. Well, maybe I'll use an example for a live investment in our portfolio that Renee referenced, and maybe it's helpful to the room. So we invested in a company based in Argentina that is focused on giving farmers the tools to document their growing cycle. So document the plant from seed in the ground to fertilizing to cover cropping in the mid-season, and in embedding regenerative agriculture practices in that growing cycle. By giving the farmer the ability to document those activities, which are often ongoing already, but are very supportive to the soil health, you are then able to have the surrounding stakeholders, so financiers, banks, seed companies, and a few other kind of circling institutions, pay for the insights that come from those data and those images and documents on the farm, which is often some of the hardest data collect at that first mile. So you crop it again, starting in Argentina, Chile, and I believe a few neighboring countries in Latin America with soy and cotton. We can see that applying broadly also to the farming operations in the US, but and Canada, where they're focusing on wheat today. You might imagine that something related to the waste sector, and I know Stan is working internationally in RecycleGo. The waste segments are totally different in different parts of the world. So in the US, this kind of curbside collection or commercial collection to a materials recovery facility and then to the reprocessors, that's a pretty unique setup. And in other parts of the world, that's reliant on kind of pickers and aggregators and then brokered out to a processor. And so that more distributed infrastructure, more manual labor for collection, not in a curbside setting, is a totally different beast that actually needs a totally different set of software and tools to help digitize and get those pickers paid. And so you can see that there would just be different use cases geographically based on the value chains and the supply chains of whatever it is that you're talking about. Great, and this has been so fun this morning. I'll type my email into the chat here as well, but anyone else got a burning last question or two?
And I'll say just real quick for the record, because maybe the conversation took a little bit of a consumer and CPG bent, but we invest in a lot of technology and other types of companies again. And like for example, I led an investment in Olive, Shop Olive. It's a I don't know if you guys are familiar with Loop, which is somewhat similar, but Olive is the place where they're consolidating. It's an e-commerce operation where they consolidate purchases, so that if you're buying from Amazon and Walmart and Target and this and that, on your ad, and they have plugins to browsers, etc. So instead of things coming to your house, they go to Olive, they consolidate, and they come to you with one package. You grab whatever you need. If you're gonna make returns, you put it back into the tote. You don't process any labeling or returns at Walmart or Amazon or J.Crew. You just put it back in the tote. They take it and then they process and the logistics and send it back to different places. With the goal being that over time, Amazon and Walmart or Target are not even gonna give a box and ship a box to Olive, right? You're gonna start taking away some of the trash because they're shipping in bulk to Olive, and Olive is consolidating. Instead of you receiving 10 different USPS, FedEx, UPS trucks per week into your house, you get one truck. So huge savings all around in materials and gas and waste, and it's crushing it. And it's all purely basically logistics and e-commerce play. They've gone to all the different websites, right? Because you got to get the plugin of like, when you go to jcrew.com, it says, do you want to have it delivered through Olive? So lots and lots of technology and logistics. And again, lots of atoms. So I just wanted to make sure that people don't think that we're just purely in goods. Anyway.
So founders out there who are not purely into goods, maybe you have a question now that Renee spelled that out. Or any last questions?
Maybe not much of a question, but a comment and a thank you for both Renee and Hannah, especially when Hannah was speaking about the prospecting of, or the anticipation of questions that investors or even users might have. It kind of makes us less insane, or because when we keep on thinking, we think about all kinds of possibilities. So yeah, thank you for putting that into words.
Thank you.
I just
Well, go ahead, Mike.
No, I just was saying thank you. I really enjoyed today's conversation.
Eric has a question in the chat.
I mean, you are one of thousands. And again, that's the challenge is, unless you have done your work to confirm that they're not conflicted out, right? Because again, if they invest in a company that's just like yours or very similar, most funds will not invest. There are particular concentrated funds that then tell their founders, all I do is invest in car sharing companies via Uber, Lyft, whatever. So you should never share any information. I will never try to help you out because I don't want to create a fiduciary liability issue by sharing information from Uber with Lyft, right? That's anti-competitive. So there's very few funds that do that. There's some, but most funds don't do that. So I know it's tough to get the no's, and you want to think that you can turn it into a yes, but unless you've done all the work to 100% understand as to why you got that no, then you can't flip it around, right? Like Hannah said, in terms of like, you try to the extent you even get a basic conversation, you have to ask for feedback and they tell you no, then you can consider whether or not there's any chance of you doing something to address that initial concern. But also, I wouldn't say come back tomorrow with like, oh, you say no to X. Well, this is what we're doing. You're just wrong, right? Try in 6 months, try in a year when you have in fact now done significant differences and advances into the business to prove that the initial hesitation from the investor was just incorrect.
Have you ever invested in a company or a founder who did make significant changes and came back to you? Because I do know founders and investors rather who have done that.
I have bought companies that initially we said no, and then turned around and bought it. These are not hundreds of millions of dollars, but in the under 100 million, looked at a company, passed, looked at it again, bought it. So real purchases, real money. Yes.
Yeah, same applies within Close the Ventures. We frequently say, let's stay in touch. Would love to see how things roll out in 6 months. Would love to see how these particular concerns get addressed. So it's important to walk away really tactfully, to walk away with things on good terms, very professionally. You never know down the line what can happen.
Especially in the hardcore, material sciences and products, right? Like IP, like you're developing something, you're like, wow, that has real potential, but let's see the actual patent application. Like finish the patent application. Let me read it. Let's see what you got, right? Like just, anyway.
Eric mentioned that stay in touch is a no for most founders, but that's not necessarily the case. And I know this from experience. It's just, I know that there are founders who feel that, a response like that is a no, but, I guess that in some ways separates, I hate to use this expression, but it's an expression that's out there, the men from the boys, and who is, determined and is going to follow up and is going to stay in touch, and things can change.
Yeah, some of the mechanisms we've seen for staying in touch that are helpful is, often when you've made a contact with an investor, you'll send out like quarterly or biannual updates just about the business, and even asks of like where you need help and where you're hiring for key things. Those are effective means that, it's almost a newsletter style. And, I think investors see thousands of deals in a year. We know how to say no when we need to. So I do hope to stay in touch. It does hold something because we often mean that very genuinely. But Angela, I know you have a last quick question.
But yeah, that's fair, because sometimes a no is a no, and sometimes a stay in touch could be a stay in touch. Now again, not every fund it tries to be as straight shooters, but like if we say no, it is a no because we actually truly also considered you, right? So we try to again be transparent up front. But we'll tell you we have a conflict, or we don't invest in this sector, right? Or whatever it is.
So Angela, question.
I always look at it as a not right now. Okay, so this is more about the culture of building relationships with VCs and angel investors. So pre-pandemic, it looked a lot different, right? And now that we're slowly, meeting in person and still doing some virtual, what are your thoughts on building relationships in this kind of hybrid space, do you think it's still as viable as trying to get in-person meetings, or that it'll continue along this path where it could be meeting in person or having a virtual conversation? Does that make sense at all?
No, you wanna? Okay. Look, I think no matter what you're doing, venture capitalists have had to figure out how to do deals completely digitally at this point. So we're getting used to it, and you can build a good relationship with someone digitally. I think that's just the truth of it. It's not going to hinder you in any way at this point. I would say no matter what it is that you're doing, hybrid or fully digital right now, you should just make the effort, right? And so whether that means like offering to the investor, like, look, I'd be happy to swing by your offices and pitch in person, would be happy to meet you for coffee, doing like making the effort to have those relationships, and also, making the effort to show up digitally. So don't be late to your meetings. Don't blow off your meetings with investors. Be the one who's like super flexible if the investor needs to reschedule, that type of thing. It comes off, there's like a whole new digital culture behind it, I think, and it comes off really well that you're there, you're present, you're on time, you've got your video on. Like it actually does go a long way. And I know that those are all new nuances we're figuring out together, but I would say, if you've made the effort to meet in person, or once you get to this stage, maybe with your angel investor that you're, nearing final stages of the conversation, be like, hey, I would love to, solidify how we're going to work together over a coffee or a meal, and kind of figure out where their comfort level is.
Mm-hmm.
Yeah, Fred Wilson just had a great post about this, right? avc.com, Uniscore Ventures, bad marriages. I think it was like this week, but I don't think anybody's going to go back to making you fly, for example, to make a pitch. So I think it's way better for founders and entrepreneurs. Like it's like 99% better. And maybe for, pre-seed and seed is not super critical perhaps, but as you start getting into, a particular investor putting in, $1 million, you want to go and shake hands and, make sure you click, because this person will be tied to you for a long time. They put their hard-earned money or money from people that trust them, and they have got to try to protect that money. But just overall, it's way easier just participate in a million of these digital conferences and meet people and go from there. I think it's way easier to actually get access than when you had to go to the office of Uniscore Ventures and knock on the door, right? It's way harder to do. All right, got to drop.
Thank you so much.
Mike, what? 10 seconds. 9, 8.
My question is too long.
7.
I'll
All right. Thanks, everyone.
Thank you,
All
guys.
right,
Thank you, Hannah. Thank you, Renee. And thank you, everybody, for attending. Oh,
Thank you, Bonnie. That was awesome again. You have a great day.
wait, let me stop recording.